So welcome back to the channel. In this video, we're taking a look at the portfolio buckets I'm allocating to over this bear market in anticipation of the next bull market. So we're going to go through the 4 buckets here we have today and the percentage breakdown I plan on putting in each of them. And we're going to talk through a few of the cryptos within each of these buckets. But however, this is not a finalized list. I'm still trying to shortlist this down. And I think dependent on the amount of money you can put into the markets, so less money, you should have less protocols. The more money, maybe you can spread your bets a little bit more. I'm eyeing up 12 in total. So that would be Bitcoin and Ethereum plus 10 other alternative coins on top of that. Currently, I've got a list of around 28. So I've got quite a bit of trimming down to do, which is, the reason for the research, the reason for the videos that I'm putting out. So hopefully going to whittle those down and then have, at least by the end of this year, a real firm list that I'll just go hard into with those 10 protocols plus BTC and ETH. So the portfolio structure will be something like this. Essentially having a low risk portfolio made up of Bitcoin and Ethereum and allocating roughly 30% of all my funds into that. I think this is a very sensible thing to do. You're going to make gains with Bitcoin and ETH. They're definitely going to hit new all-time highs in a new cycle, and you can't say the same for other cryptocurrencies. So this is the safety first approach and having a good allocation towards both of those. My skew will be for a higher ETH allocation over Bitcoin. Does have a slightly higher risk with the merge to proof of stake, but I do believe it will continue to outpace Bitcoin, and we'll see all-time highs in its BTC comparative going forward. So that is my skew for low risk portfolio, roughly 30% there. Then into the capital gains. So this is where I'll be allocating to layer 1 and layer 2 protocols primarily. I think that is the big money spinner. And some of the ones that I've started to eye up are very low market cap anyway. I'm not particularly looking at any multi-billion ones. There are one in there, Polygon, but primarily we're looking at ones that are around 100 mil to 200 mil or even less. And we can see that these kind of layer 1, layer 2 protocols can capture huge value in a bull market and be multiples of billion in total valuation. So the capital gains bucket there is going to be taking up around 10% of my portfolio. We're going to go into these cryptos in specific in just a moment. Then we have the Metaverse. I think it's fair to say that this is the most pumpy sector of the market there is. And also what we're going to see is continued movement into the Metaverse sector by established gaming companies. We're seeing big tech as well starting to move in with Meta. I think this is one of these sectors of the market that can really draw in a ton of new capital and new investors into the space. So I think it makes a lot of sense to have a metaverse-based portfolio allocation, and I've gone for 10%. So very much similar to my L1 and L2 narrative there as well. And then finally, income producers, a whopping 50%. So half of my portfolio will go towards finding those assets that produce revenue, whether that be in the form of stablecoins or other assets, and primarily through non-inflationary rewards. We're looking for real revenue, so effectively companies on the blockchain that share their revenue with stakers. And also we have to add into this one of the latest trends in the market, which is bribes, primarily founded by Curve, Convex, and that kind of battalion of DeFi protocols. So DeFi income producers around 50% of the portfolio there. So this is the kind of bucket structure that I've decided upon. These are the areas of the market I'm very much interested in and will commit a lot of time to researching in the not too distant future. Now let's just go through briefly some of the projects within these various sectors. So we're starting off here with the L1/L2 narratives. These various protocols are ones that I've earmarked as, capital gains. So looking for ones that are under development, maybe early stage in terms of their product life cycle, and ones that are yet to really attract huge traction, but ones that potentially can get huge traction. So just a few that I've brought up on screen here. The first one being A-Star, the Polkadot narrative here. I think this could be the leading EVM compatible chain on Polkadot. If Polkadot pumps, one of these EVM compatible chains, either A-Star or Moonbeam, will get sent. And I believe A-Star has positioned itself slightly better at this moment in time than Moonbeam, the other project in Polkadot. And so with a market cap of 150 mil, as we saw the likes of Near Protocol up to almost like $5 to $10 billion, I believe, at max. So you can see there's huge growth potential for these types of lower tier L1s and L2s. In terms of L2s, we have the likes of Optimism and Arbitrum. genuine Ethereum layer 2 protocols. This means that everything settles back to the ETH main chain, but what we've started to see here is OP Summer, a lot of farming incentives for optimism right now across its various tokens. Very interesting stuff over there. And in the next month to 2 months, we're also going to have an Arbitrum period where they start to do a very similar thing as well. And these are layer 2s for ETH that are attracting serious investment and serious time and research spent by gigabrains in the market right now, so not to be slept on whatsoever. And as you can see, market cap under 300 million here. I expect, of course, over the coming months, things to continue grinding lower. That is just my belief due to the incredibly bad macro backdrop, and I'm sure a lot of us in Europe will be feeling rather poor over the winter months. Then we have the likes of Stargate Finance. We talked about this one recently. Really interesting protocol due to the fact it has the omni-chain approach and essentially has liquidity sat across all chains. So no need to utilize bridges. You can just tap into Stargate Finance directly, and I think a lot of protocols will do this. So this could actually capture a ton of value. What I also like about it, the tokenomics VE for escrow tokenomics means there's the ability to stake the token in the near future to actually accrue some of those protocol revenues. So this kind of hits 2 buckets once that goes live. Then we have Polygon. This one clearly setting itself up to be a metaverse and gaming layer 2 here, with Polygon Studios attracting huge capital. And very interestingly, they've headhunted a load of real movers and shakers in the gaming sector. Then we have the likes of Aleph Zero or A0. If you know anything about Aleph, it has one of the highest contributor commits on GitHub, so these guys really can ship. You can see there's not a lot of information on CoinGecko for this one. It is very much under the radar and one I'm definitely keeping tabs on here. So as you can see from those kind of picks that we've gone through, I want to whittle this down to maybe 3 or 4 only, but what I'm looking for is chains that can attract a lot of value from maybe Ethereum, also ones that have kind of niche product market fits, maybe in the gaming sector, or ones that are just doing something completely new. And primarily, as I say, not looking for things that have already gone up to multiple billions in market cap. We want to buy stuff that is super, super cheap and undervalued, and that can run up massively without having some salty bag holders looking to suppress price and dump it back down. So primarily newer protocols in the new cycle. Moving on to Metaverse. So 10% of my allocation will go into the Metaverse category. This is probably the trickiest one to actually allocate to. I know a lot of people will just spread bets, spray and pray in this sector, but I think there's maybe other ways to go about this. Maybe looking at the top 2 here, Decentraland, Mana, and the Sandbox here, you kind of get an allocation into the growth of Metaverse due to just holding these tokens, as what we've seen is Decentraland already has its own Metaverse built out. The Sandbox similarly building out one as well that is pretty well developed and has the likes of Snoop Dogg backing it. So what you have here, these 2 mainstays, they've already attracted institutional investment, and they will give you a kind of umbrella approach into NFTs, gaming, and DeFi, as so much is being built within these. They're almost like proxy metaverse chains. And then rather than pick through individual games, which I think is a really tough task to do, and you're kind of putting all your eggs in one basket as to, I'm hoping this game really takes off and attracts a lot of users. That's a very tricky thing to do, and it's not particularly something I want to be doing in the next cycle. So I like Merit Circle down here. So there's a number of guilds and alike kind of protocols out here. YGG is another one. I'll be doing some comparing and contrasting between these two, as I think they're the 2 market leaders here. But MC, market cap around 200 million at this moment in time. It's kind of a proxy bet on the growth of gaming and also the amount of new users entering gaming. So this is essentially a DAO that allows maybe individuals from less privileged backgrounds to utilize the DAO's NFTs, its abilities within games, etc., to start to play to earn themselves. They take a split of 30% of the revenues or the profits, and 70% goes to the gamer. They have 3,750 gamers currently, and they're playing across 50 different games. They're buying up assets, NFTs, they're buying up land in different metaverses. So if these things start to go up and they're making good decisions here, you're going to get a share of the spoils by holding the MC Merit Circle DAO token. So that is utilized for governance, and it also decides what to do with all these revenues that are being made. So it's kind of like a proxy bet on the metaverse at large, and I do think it's very, very interesting. Looking through some of the numbers, currently they have around 40 million in cash assets, very nice, 63 million in total investments, and last month they realized a profit of $4.7 million. And then we have the tokenomics here. They've been buying back and burning a load of tokens, reducing the total supply from 1 billion down to 899 million. Thus far, it's also got a load of gigabrains behind it and has some noteworthy influencers behind it as well, the likes of Pentoshi. So I think this one's a really good proxy bet for the metaverse, in my opinion, and is one that I really do like. I can see myself buying into this token. And then the second thing here is Neo Tokyo. So this is actually an NFT investment. You need to own an S1 citizen to get the full benefits, I would recommend. And I do own one of these, and within this we have access to the Discord for Neo Tokyo, where we have some super builders in there and just loads and loads of gigabrains working together to build out the future of metaverse and gaming, and also invest in the best projects out there. This of course is the brainchild of Elio Trades and Alex Becker, need I say much more? And I think this kind of influence and this power within the sector gives another great proxy bet for doing very well in gaming and metaverse. And not to even mention, there is actually an investment arm you can get involved with by utilizing the Bytes token. This is the token that is yielded by the actual citizens themselves. If you don't know much about that, I would highly recommend doing some research. Very interesting stuff. And I think there will be quite a lot of deal flow going through Neo Tokyo in the not too distant future. Now, the last bucket and the largest bucket for me is DeFi and investing in revenue sharing or revenue producing assets, something that's going to get you printing dollars during the bull market and even during the bear market. Now, if you go to cryptofees.info, you can see the fees taken by these various protocols. You then just need to do some research as to which ones of these actually share the spoils. The likes of GMX is currently one of the strongest DeFi protocols out there. They share all of the fees with their stakers. Depending if you're on Arbitrum or over on Avalanche, you will receive a different rewards token for either of them. But what you can do is, of course, just liquidate the reward token. So for example, I believe on Arbitrum, it's paid in ETH. You can just liquidate the ETH into dollars. You've then got yourself a salary from holding GMX and staking it. We also then have the likes of Synthetic, SushiSwap, and Trader Joe down here that we've covered recently, also Abracadabra Money with Spell, and the likes of Curve. These are all revenue sharing protocols that have, as you can see on screen, a load of fees coming to them on a very regular basis. And I do believe during a bull market, all the fees for these types of protocols will go through the roof once again. And so you want to be buying these assets when they're cheap and then riding them up and taking out your share of the spoils on the way up and cashing that into dollars ready for the next cycle. So this is my kind of approach with this, and this is one of the very good websites, cryptofees.info, where you can see the various movers and shakers in this sector. If we just look at DeFi overall though, DeFi market cap is under $50 billion and only makes up around 4.5% of the global market cap. So DeFi, you would think, would have a bigger share in the whole crypto sector than that, and I do think it is highly undervalued, especially with these protocols where you can actually earn off just holding them and staking them. There's a lot in here. There's many protocols that I'm very much interested in. I'm interested in the Curve wars with Curve and Convex and the bribes that can come with those. I'm very much interested in decentralized exchanges, the likes of Trader Joe, which we covered recently. And if, for example, Uniswap turns on the profit sharing feature, which they can do, that again would be very much interesting. The likes of PancakeSwap down here on the BNB chain, again, it is a revenue producer. Then we have some protocols like Frax Share down here. They're going to be trying to bring out their own stablecoin, as will Curve. And I think the stablecoin game is definitely going to be the hottest ticket in town. I'm also allocated already to QiDao, which is from My Finance, and the MAI, which is a decentralized stablecoin, the My Dollar. Again, we're looking for these kind of protocols that can have huge upsides and distribute rewards to their stakers. So those are my insights as to where I'm looking to allocate funds in these various different buckets, a bit of a percentage breakdown as to what I'm trying to achieve here. I want to have a portfolio that continually produces revenue so I can allocate those funds as I see fit and essentially extract a load of value during the bull market ready to deploy in the bear markets. That is the way that this should work, and all the while still allocating to the likes of layer 1s, layer 2s and metaverse, some areas of the market that I think will see the biggest upside during the next bull phase. If you found this useful, drop me a comment down below, let me know your thoughts. And if you're feeling extra generous and are new around here, then subscribe to the channel. I'll see you in the next one. Goodbye.